Ever feel like you need to be a forensic accountant just to get a clear picture of how a major financial institution is actually performing?
Yeah, it can be pretty overwhelming, right?
We get it. That's why we've taken on the task of sifting through the dense reports and investor presentations.
Extracting the really vital information so you don't have to.
Exactly. Today, our focus is sharp. A deep dive into the financial results of Kotak Mahindra Bank.
For the fiscal year ending March 31st, 2025.
We've got their audited results, both standalone and consolidated, plus their investor briefing.
So a pretty solid set of sources to work from.
Our mission is straightforward. Pinpoint the key performance indicators, understand the significant changes, and assess the overall financial health of the bank and its subsidiaries.
Right. So where should we start? Consolidated view.
Yeah, let's start with the big picture view, the consolidated performance.
Okay. So looking at the consolidated figures, Kotak reported a profit after tax, PAT, of 4,933 crore for Q4 FY25.
4,933 crore. And how does that compare?
Well, what's interesting is that's actually a 5% increase compared to the previous quarter, so suggests some positive momentum quarter on quarter.
Okay, Q momentum. And what about returns for investors? That's always key, isn't it?
Absolutely. Crucial metric. Their return on equity, ROE, for that same quarter, Q4, was 12.90%.
12.9%.
And for the whole fiscal year, FY25, it averaged out at 13.12%.
Right, so respectable numbers, but how do they stack up against, say, last year?
Well, that's the thing. They are respectable, but it's worth noting they are slightly lower than the previous year.
Any thoughts on why? Strategy shift? Market conditions?
Could be a mix. Maybe a strategic focus on growth that hits immediate profits or just broader market stuff. Hard to say definitively from just this.
Okay, and return on assets, ROA?
That was consistent, 2.36% for both Q4 and the full fiscal year. Measures how well they use assets to make profit, you know?
Got it. So solid returns, maybe a slight dip year on year there. What about the sort of underlying value the bank is building? Any indicators for that?
Yes, a key one here is their book value per share.
Right, the net asset value per share.
Exactly. And we've seen a pretty significant year-over-year jump there. It hit 792.
792.
Which is up a substantial 21%.
Wow, 21% increase. That does suggest the bank's underlying foundation is strengthening, doesn't it?
It certainly points that way.
Now, I saw something. This is where it gets really interesting for me. A note about a change in how they're valuing investments. What was the impact of that?
Yes. That is a significant development. Kotak aligned its investment valuation for its group entities.
But excluding insurance, right?
Excluding insurance, yes. They aligned with the RBI's latest master direction.
And the effect?
Well, it had a direct positive effect on the financials. In Q4 FY25 alone, their profit saw an increase of 411 crore after tax.
411 crore just from that change.
Net of tax, yeah. And their reserves got a boost to 4,262 crore net of tax as of March 31st, 2025.
Okay, so a regulatory adjustment gave them a noticeable bump on the balance sheet.
Definitely had an impact.
So that's sort of a one-off boost. What about the core business? Are people borrowing? Depositing?
The fundamentals look healthy. For the whole of FY25, their average advances loans given out grew by a robust 18% year over year.
18%. That's strong growth.
It is. And at the same time, average deposits also grew significantly, up 16% year over year.
Okay, so good engagement from both sides.
Seems so.
And the risk. With all those loans going out, how are they managing bad debts?
The results look pretty good on that front. Their net non-performing assets ratio, NNPA.
That's bad loans after provisions.
Right. It remains remarkably low at just 0.31%.
0.31%. Very low.
It's a strong indicator of loan portfolio quality, you know.
It sounds like Kotak holds a pretty dominant position in some key areas, too. The presentation highlighted a few.
Yeah, they do. Notably, among banks in India, Kotak is the leading financier for tractors, commercial vehicles, and construction equipment.
Right, CVs, CE. Tractors, number one.
That dominance shows deep market penetration. Plus, as of December 24, they were the #4 private sector bank in India by balance sheet size.
That's significant scale.
Yeah.
And market cap. That's usually a big number, too.
It is. As of March 31st, 2025, their market cap stood at 4.32 trillion.
4.32 trillion reflects a lot of investor confidence.
Absolutely. And there's another interesting point. Kotak Private apparently manages wealth for 60% of India's top 100 families.
60%, according to the Forbes list.
According to the Forbes India Rich List 2024, yeah. Highlights their strength in the high net worth space.
Wow. So a lot of trust from the top end. What about their broader reach? How many customers overall?
It's extensive, 5.3 crore bank customers.
5.3 crore.
Their physical network includes 3,295 ATMs, including the cash recycler type.
Okay, good accessibility.
Total group assets under management, AUM, hit 669,885 crore.
Huge AUM.
And their total group branch network in India is 5,381. That includes the bank branches, even the ones in DIFC and Gift City, plus Kotak Securities branches and franchises.
Those are seriously impressive numbers. Shows a vast, well-established institution. Okay, let's dig a bit deeper now. Compare this past quarter and year with the previous ones. What shifts stand out?
Okay, comparing Q4 FY25 with Q4 FY24, we see a few trends. ROE, as I said, dipped a bit, 16.85% down to 12.90%. ROA also slightly down, 2.92% to 2.36%. And PAT saw a modest dip too, from 5,337 crore down to 4,933 crore.
Okay, so profitability metrics down a bit year on year for the quarter.
But it's important to note their customer assets grew quite a bit from 479,169 crore up to 537,860 crore.
Right.
And book value per share, as we mentioned, strong growth there, 653 up to 792.
So assets and underlying value are up.
Exactly. And one more thing, their capital adequacy ratio, the CAR CETI that strengthened, went from 21.8% to 23.3%.
That's a healthy capital buffer, isn't it? Good cushion for growth or any potential trouble.
Definitely positions them well.
Okay, so a bit of a mixed bag in the quarterly comparison. Profitability down slightly, but assets, book value, and capital are up. How about the full fiscal year comparison? FY25 versus FY24.
A somewhat similar pattern, actually. ROE decreased from 15.08% to 13.12%.
Yeah.
ROA also saw a slight reduction, 2.66% down to 2.36%.
Right. But what about the full year profit, the PAT?
The full year PAT showed robust growth. It increased from 19,113 crore in FY24.
Although wasn't there a one-off gain in FY24, the KGI divestment?
Good point. Yes, if you exclude that gain, the FY24 PT was 18,213 crore.
Okay, so from 18,230 crore.
Up to 22,126 crore, so solid PT growth for the full year, even excluding that divestment gain.
Yes, and their customer assets also showed year-on-year growth for the full year.
It really seems like that general insurance divestment last year still kind of echoes in the year-on-year comparisons for the full fiscal year PT.
It's a crucial point to remember when looking at those YOI numbers. Now, should we break down the group PT by the individual companies? Yeah, let's see where the profit's coming from within the group.
Okay. It's quite varied across the different businesses. In Q4 FY25, Kotak Mahindra Prime, that's their vehicle financing arm,
Right.
saw a significant 34% year-over-year jump in PANI.
34% for Prime. Nice.
And Kotak AMC and TC Asset Management and Trustee Co-Res, they had an impressive 143% YOY jump in Q4 PT.
Wow, 143%. What drove that?
Well, as we discussed earlier, that 411 crore gain from the RBI master direction change that directly boosted the PAT of the subsidiaries and associates, excluding insurance.
Right. So that regulatory alignment impact flowed through to the subsidiaries too.
Exactly.
So it seems while the core bank's standalone PAT might have dipped in the quarter, some subsidiaries showed really strong growth momentum, significantly lifting the overall group performance.
Precisely.
What's the breakdown by the main business segments, like banking versus capital markets, etc.?
Okay, for Q4 FY25 PT contribution, bank and other lending-related entities were the biggest chunk, 86%.
86%.
Then capital markets at 9%, insurance just 1%, and assets management and others at 4%.
And for the full year, similar picture.
Broadly similar for FY25, bank and lending was 79%, capital markets 10%, insurance 4%, and asset management and others 7%. That's if we exclude the KGI divestment gain again, just to see the ongoing operational picture more clearly.
Got it. And the overall net worth of the entire Kotak group, how does that look? And what's the overall ROE for the whole group?
So the total group PT for FY25 hit that 22,126 core figure.
Right.
That resulted in a substantial net worth of 158,420 core.
Okay.
And that translates to an ROE of 13.1% for the fiscal year.
13.1% overall.
Or if you adjust for the impact of that RBI master direction on valuation, it comes out slightly higher at 13.5%. Gives a slightly different view of underlying profitability.
Makes sense. And we mentioned earlier, both that RBI change and the ZKGI divestment gain boosted reserves significantly.
Yes, both contributed to strengthening the reserves base.
Okay, last point on the consolidated picture. How much does each business segment contribute to that total net worth?
Right, the net worth contribution as of March 2025. Bank and other lending entities, again the largest, contributing 84%.
84%.
Followed by capital markets at 7%, insurance at 4%, and assets management and others at 5%.
Okay, that gives us a really solid understanding of the consolidated picture for the Kotak Group.
Yep.
Let's narrow the focus now to bank's standalone performance. How did the core banking operations do?
Right, standalone bank performance, the PIT for Q4 FY25 was 3,552 crore.
3,552 crore. How does that compare year-over-year?
That's actually a 14% decrease compared to Q4 FY24.
Oh, a 14% drop year-over-year for the standalone bank's quarterly profit. What factors were behind that?
Several things. Their net interest margin, NIM.
The difference between interest earned and paid?
Yes, that stood at 4.97% for the quarter.
Right.
Their cost-to-income ratio, measuring operational efficiency, was 47.71%.
Nearly 48%. A bit high.
It's higher than the previous year. Standalone ROA for the quarter was 2.19%.
So pressure on margins and efficiency. But did assets grow?
Yes, their standalone customer assets saw healthy YoY growth, up 13%, hitting 477,855 crore.
Okay, assets growing. And asset quality?
NPAs.
Still strong. Net NPA ratio remained low at 0.31%.
Consistent there.
Cancer ratio, the low-cost deposits was 43.0%, and the CAR CETI ratio was 22.2%. Still very healthy capital.
Okay, so standalone. Assets grew, asset quality strong, capital good, but pressure on and costs impacting the bottom line for the quarter. How does the full fiscal year standalone compare, FY25 versus FY24?
Comparing the full year, standalone PT was 13,720 crore in FY25 versus 13,782 crore in FY24.
Pretty flat year on year then.
Almost flat, yeah. Remember, FY24 included that KGI divestment gain, which made it 16,450 crore if you count that.
Right, so excluding that gain, FY24 was lower, meaning FY25 showed some growth.
Actually, no. The base FY24 standalone PT without the gain was the 13,782 CR.
Yeah.
So FY25 was slightly down even compared to the operational profit of FY24. Okay, got it. Standalone PT slightly down YoY operationally. What about minimum and cost income for the full year?
Full year NIM increased from 5.32% in FY24 to 4.96% in FY25.
NIM compression.
And the cost-to-income ratio increased from 45.99% to 47.17%.
Costs creeping up.
And full year ROA decreased from 2.61% to 2.21%.
Okay, so that reinforces the trend we saw in the quarter. Pressure on standalone profitability and efficiency metrics for the full year, too.
Yes, it seems the core banking operations definitely face some headwinds in FY25, impacting overall profitability despite the growth in loans and deposits.
Let's look closer at the P&L then. What drove the income and expense changes?
Okay, for Q4 FY25, net interest income saw a modest 5% YoY increase.
Only 5% II growth.
But other income grew 7%, mainly driven by fee and services income.
Fee income holding up.
Interestingly, income from trading and market activities saw a significant decrease.
Market volatility impacting trading gains, maybe.
Could be. Operating expenditure increased by 13% YoY.
Okay, expenses up 13%.
And notably, there was a substantial rise in provisions and contingencies in Q4 FY25.
Higher provisions, why?
It included a specific provision on an alternative investment fund, an AIF investment.
The AIF provisioning rule from RBI.
That seems likely related, yes.
Yeah.
Also, interest received on income tax refunds had a positive impact on the PUT figures for the quarter.
So specific items like AIF provisions and tax refunds definitely shaped the Q4 bottom line. Let's shift to the balance sheet. Any big shifts in assets and liabilities?
Looking at the balance sheet as of March 31st, 2025, we see increases in cash, balances with other banks, investments, and net advances compared to both March 2024 and December 2024.
So assets growing across the board.
And deposits also showed healthy year-on-year growth, but their borrowings also increased during this period.
Okay, deposits are crucial. What are the trends within the deposit mix? KA versus term deposits.
Right. Their deposit trends show a 9% YoY increase in current account deposits.
Okay.
And a significant 25% jump in term deposits.
Wow, 25% growth in term deposits. But what about savings accounts?
Savings accounts saw a slight decrease of 1% YoY.
Case of growth seems a bit skewed towards current accounts then, with savings dipping slightly.
Seems that way. The cost of savings accounts was 3.79%. And their overall cost of funds was 5.09%.
So that big jump in term deposits, while good for funding, probably added to the cost of funds pressure, contributing to the NIM compression we saw earlier.
That's a likely factor, yes. Term deposits are generally more expensive than CASA.
Makes sense. And where are these funds going? What's the loan portfolio, the advance mix look like on the standalone side?
Customer assets, mainly net advances, grew. The mix shows consumer loans are the biggest chunk at 47%.
Nearly half consumer loans.
Followed by commercial and corporate. We saw strong YOY growth in home loans and LAP, loan against property, and also business banking loans.
Good growth there. Anything else?
Interestingly, credit cards saw a slight decrease.
Oh, credit cards down slightly.
Slightly. And as of March 31st, 2025, their unsecured retail advances, things like personal loans, consumer durable loans, excluding credit cards, made up 10.5% of their total net advances.
10.5% unsecured retail. Okay,
Right.
asset quality, always crucial. How are the NPAs and provisions looking standalone?
As we said, net NPA ratio still low at 0.31%. Gross NPA ratio was 1.42%.
Okay.
Their provision coverage ratio, PCR, which is how much they've set aside for potential losses, is at a comfortable 78%.
78% coverage, that's solid.
Yes. While there were some fresh slippages loans turning bad during the quarter, there were also upgradations and recoveries. Write-offs happened too, standard practice.
And restructured loans.
The outstanding amount of standard restructured fund-based loans remains relatively small.
Good. Lastly, on standalone, the presentation mentioned tech initiatives. What's the focus there? Resilience, efficiency, security, data, tech.
Yeah, that's their branding for it. It covers several key areas. They've put in real applications clusters, RAC, to boost system availability.
Okay, stability focus.
Automated disaster recovery, increased capacity for critical systems like core banking and UPI,
Scaling up infrastructure.
scaled up their monitoring platforms too, focused on digitizing frontline processes, and they developed and launched a unified digital payment platform for merchants built in-house.
An in-house merchant payment platform. Interesting.
Yeah, integrates various payment methods, so it underscores a real commitment to strengthening their tech backbone.
It definitely sounds like they're investing heavily in tech, which is vital these days, isn't it, for efficiency and staying competitive?
Absolutely essential.
Okay, let's briefly touch on the subsidiaries. How did some of the key ones perform? Kotak Securities.
Kotak Securities reported a PAT-T of 348 crore for Q4 FY25 and 1,640 crore for the full year.
Okay.
Both figures include some gains from that investment portfolio valuation alignment we discussed.
Right, the RBI master direction impact again.
They maintain strong market shares in cash and derivatives trading. And a notable trend, do-it-yourself DIY orders are over 97% of their retail broking volume.
97% DIY. Shows high digital adoption by their customers.
Definitely. And they keep adding new platform features.
Okay. How about the asset management arm? Kotak Mahindra, AMC, and Trustee Co. Strong year there, too.
Seems so. Pay-T of 364 crore for Q4 and 977 crore for FY25. Again, includes those valuation gains.
Got it.
Their overall and equity average assets under management, AAUM, look healthy, shows investor confidence. They've seen significant growth in AUM coming from online investors, and monthly SIP inflows are rising consistently, strong retail participation.
Good signs for retail engagement. Market share.
The market share in equity AAUM, excluding ETFs and arbitrage funds, is also pretty noteworthy.
Okay. Any other investment entities? Alternate assets.
Kotak alternate asset managers were active, made notable investments in FY25, mentioned names like Newberg Diagnostics, Tirupati Medicare, Matrix Pharma, deploying capital across different sectors.
Right, and the life insurance business. Kotak Life.
Kotak Mahindra Life Insurance. They reported an Indian embedded value, IEV, of 17,612 crore.
Embedded value, the long-term value.
Exactly.
Yeah.
And value of new business, VNB, was 959 crore for FY25. Their distribution mix is pretty balanced between bancassurance and agency others.
Okay.
They saw growth in individual renewal premiums, good customer retention sign, but their Q4 PD was impacted by new business strain, especially from non-par products. The initial costs of writing new business,
Right, the upfront costs hit the profit initially.
Exactly. They also launched new digital things like Optimus and the Happy You app for customers.
Okay. And Kotak Prime, the vehicle financier.
Kotak Mahindra Prime, strong performance there. PD up 27% YOY in Q4 FY25.
27%.
And up 14% YOY for the full fiscal year. So robust performance in auto finance.
It's really clear how crucial this diverse set of subsidiaries is for the Kotak Group's overall health. each has its own dynamics and contributes significantly.
Absolutely. They provide diversification and different growth engines.
So stepping back again, what's the big picture strategy Kotak is following?
They talk about transforming for scale. That's the headline.
Transforming for scale. What enables that?
Key enablers they mention are one Kotak, driving synergies across the group, a strong commitment to prudent risk management,
Always important for a bank.
and using technology at the core as a key driver for innovation and efficiency.
Makes sense. And who are they focusing on?
Their strategic focus is on creating sustainable value for all stakeholders: customers, the company itself, the community through responsible growth, and their colleagues, their employees.
Right, the 4 Cs.
Exactly. And they emphasize having a strong, committed leadership team to drive all this.
Okay. And finally, just to wrap up the details, audit and regulatory compliance. Anything key there?
Well, the main thing is the consolidated and standalone audited financial results for FY25 were approved by the board on May 3rd, 2025.
Okay.
Audited by joint statutory auditors, and they issued unmodified opinions.
Clean bill of health from the auditors then.
Essentially, yes. Means the financials present a fair and accurate view. We've already talked about the implementation of the RBI's Master Direction on Investment Portfolio Valuation from April 1st, 2024, and its impact.
Right.
The detailed consolidated Pillar 3 disclosures, including Basel III capital ratios, they're available on the bank's website, though those specific disclosures aren't audited externally.
Okay. Available for review.
And they've also disclosed details about loans transferred or acquired during FY25, as per RBI guidelines, covers both standard and stressed loans.
Right. Transparency on loan movement.
Standard compliance stuff.
Okay, so to kind of bring this deep dive to a close, it really seems Kotak Mahindra Bank showed pretty resilient performance in FY25.
Yeah, navigating a dynamic environment, achieving growth in several key areas.
The impact of regulatory changes, especially that RBI master direction, is clearly visible in the numbers.
Definitely noticeable.
And their strategy seems focused on long-term value, using scale, tech, and looking after all stakeholders. That seems to be the guiding path.
Precisely. This analysis hopefully gives a condensed but pretty comprehensive picture of where Kotak stood at the end of FY25, highlighting the wins and also the areas facing some pressure.
And hopefully it's given you, our listener, a much clearer view than wading through those massive reports yourself.
We hope so.
So here's a final thought to leave you with. Considering the trends we've unpacked, the subsidiary strength, the standalone pressures, the strategic direction, what do these results suggest about Kotak's competitive position? And maybe its future growth prospects within India's evolving financial services landscape?
That's definitely something to chew on. How well are they positioned for what comes next?
Exactly. If you want to explore any of this further,
we encourage you to check out the source materials. We'll link them in the show notes. Or just visit the Investor Relations section on Kotak Mahindra Bank's official website. Lots of detail there if you want to dig even deeper.